when you talk about putting your money into assets, whether it be gold or silver, there's an old saying that says assets feed you, liabilities eat you. JP Morgan came out with a report just the other day that says China currently holds 80% of the global copper inventories, 70% of the global corn inventories, 51% of the global wheat, 46% of the global soybeans, 70% of the global crude oil, and 20% of the global aluminum inventories. The London Metals Exchange reported last year, 2022, that their global aluminum, or their aluminum inventories, rather, not global, their aluminum inventories on the LME, the 140-year-old exchange, fell by over 75% last year. And lo and behold, China holds 20% of the global aluminum stockpile. You talk about an institution that said that if the deliveries off the LME continue the way that they have been in 2022, that there will be none left in 2023. India imported 304 million ounces last year. That's more than all of the silver in COMEX, and almost 10 times more than the registered category, those bars that are available for delivery. The majority of silver within the COMEX ecosystem is not for sale. It belongs to people like me, or customers of mine, or family offices, or whatnot. They're in strong hands. And I talked a lot about in 2020 when they came out and said, we want a new Bretton Woods, that being the Bretton Woods organization. All these countries are saying, we want a new system. And I kind of thought that as being Western unfriendly, but they just came out with a new report, and you can find it on their website. And it's titled something to the extent of Gold, an International Reserve, a Barbarous Relic No More. And I thought about that for a moment, and I said, well, maybe the way to do this would be to beat them at their own punch. A lot of people thought through the years that the IMF would issue something called special drawing rights if the dollar ever ran into trouble. All of these countries contribute to a new currency called special drawing rights. Well, if the IMF is saying we want a new system and calling gold no longer a barbarous relic, just what if the IMF, along with the Western countries that are part of it, including the United States, were to beat them to the draw and issue a gold-backed special drawing rights? I don't know how it all plays out, but I can tell you that the infrastructure that is being set up is completely void of United States participation. We were told the new BRICS currency would be a basket of currencies tied to local currencies, meaning the Brazilian currency, the Russian currency, right, Chinese, the Indian, the rupee, the ruble, the real, whatever, all of these currencies together, along with commodities. So all of these together would form the new BRICS currency, kind of like a special drawing rights. But yeah, the commodities that would be pegged to the system, the immutability of those commodities, the veracity of those commodities could be pledged and shown on a distributed ledger. Now, with interest rates rising globally, the implications, to me, signal change. And a new system has to arise from what has been an experiment gone awry, the Keynesian-based monetary system, and which is based upon spending and taxation and debt, versus the Austrian, which would be something more along the lines of what a commodity-backed system would be, or as Zoltan Pozsar calls it, Bretton Woods III, which would be based upon savings, investment, and reinvestment, and commodities backing the whole thing. So this environment we are in is lending itself, if you will, to change. And I think that's where we're at right now. I think right now, realizing that when we're talking, whether it be globally or at home, things are certainly starting to speed up. So you're talking 656,000 barrels per day between Russia and Saudi Arabia are now off the market. What does that really mean? What that really means to me is that this will reignite inflation. Because everything ultimately boils down to the cost of energy to produce and to transport. And I think this will make the Fed become hawkish again. The Fed, who not too long ago told us inflation wasn't a problem, and then they told us it was transitory and that we would start to see inflation go down. But what did they do? They raised rates to 4, then to 4.5, now to 4.75, because we keep seeing inflation rear its head. They were wrong about it. It's in the service sector right now. Inflation is stronger than they thought. And now John Williams of the New York Fed says that we need to have 5.5% on the federal funds rate, even though I thought inflation was transitory or under control or was starting to come down. And I think that what we are seeing right now is a period of time where, there's chaos everywhere and uncertainty and misinformation and mistrust, whether it be from the Fed or the information that came out of the Systemic Resolution Advisory Committee on the on FDIC. But we are entering a period of time where it appears as though the central banks are, in many cases, at the very least, they are massively de-dollarizing and buying records amount of gold and silver, to your point, with China and Russia leading the effort. Whether it be by accumulating precious metals, or Saudi Arabia, after already applying for BRICS, after already saying China is their most important trading partner in oil for this year and the next 50, told the world that they're open to taking other currencies for oil. So the loss of the petro status becomes more and more and more a probability. What you and I talked about the very first time I was on your show. So when we see all of these mismanagements, all of this distrust, the gaping hole at the border, the fact that there is uncertainty and fear permeating through the country, and the leadership is not only lacking in terms of seeing them or hearing them. When we do, all we hear and see are stupid decisions that they're making, putting us further and further and further into the hole. And the Federal Reserve, who is supposed to be the beacon of safety, has a gaping hole in their balance sheet right now and is running an operational loss of over $31 billion. So the Fed isn't really anything but insolvent right now and running at a balance sheet of this 200 times leverage. But the thing about it is that when I started talking about this a few years ago, in doing my preparation, there would be one news story every few weeks to a month. And now there's 1 or 2 or 3 a day, it seems. Right. And I think that's where things are starting to speed up and become a little bit more real. We have to remember that the countries that comprise the Shanghai Cooperation Organization, the BRICS, and the Belt Road Initiative are north of 80% of human population. So these are the countries with all of the commodities, and they are basing a system upon transparency and commodities rather than debt instruments and an opaque way of showing the world what is backing the system. So I don't know that they care so much. I think they're trying to rally against the West